when it comes to federal workers and federal spending. They've underscored this decision that looks to be coming from the Fed to pause and wait for greater clarity before considering any additional rate cuts. The Fed already had to weigh the potential effects of tariffs, tax cuts, deregulation, and deportations. Now it has to put into the mix this idea of a potential decline in government spending, though now that looks perhaps to have been rescinded, and some portion of 2 million federal workers could be out there looking for a job. So the keys to the Fed outlook today will be whether it affirms that the direction of rates is still downward, that it has confidence that inflation is still headed towards the 2% target. And, of course, this fiscal policy dance that Fed Chair Jay Powell will do with reporters at the press conference where we ask questions about fiscal policy that he does not want to answer. Well, compared to how markets price the outlook for Fed rate cuts after the December meeting, futures are now priced for less of a chance of a cut in March, about the same even money chance of a May cut, but now a greater probability of that first cut coming this year in June and a second one in December. In this context, what you led with, Kelly, President Trump's recent demand that the Fed lower interest rates, that could be the least of Fed Chair Powell's concerns. He can ignore that when he can't ignore all these changes going on the fiscal side that could have big macroeconomic effects. Kelly?
And we're chasing those headlines, Steve, as well. Appreciate you mentioning that. We'll let you finish getting ready, and we'll see you in about 55 minutes. Sure. Steve Leisman with the Fed's decision at 2 p.m. Eastern. Meanwhile, my next guests still agree the Fed's bias remains towards more easing. One even says 3 to 4 cuts are still possible this year. Joining us, Michael Gapin is Chief U.S. Economist at Morgan Stanley, Subhaj Rajal, Head of U.S. Rate Strategy at Societe Generale, and Jamie Cox is Managing Partner at Harris Financial Group. Jamie, you're in kind of the broader Washington, D.C. area, so I'm going to start with you today as these headlines go back and forth about the president's plans to freeze or cut funding and workers. The significance as far as you're concerned, what does it feel like in that kind of broader region, and what does it all mean for the Fed?
Well, I think, Kelly, it's interesting to note that the source of market uncertainty used to be the Federal Reserve. Now it's just down the street at 1600 Pennsylvania Avenue. I think that's what we're seeing day by day since the president took office last week. But one of the things I think is going to be very interesting for the Fed is to watch the balance sheet. I mean, today they're not going to move on the Fed funds rate, but I think you may, in fact, see them further reduce the runoff on the balance sheet. It's about 8 months ago when they first reduced the balance sheet runoff down to about $45 billion. It's very possible they'll reduce it down to $20 billion. The reason why I say that is they're kind of running out of reverse repo, some of the easy money to run off the balance sheet. The next mile is with bank reserves, and they need to be careful given that the debt ceiling is back in play. You have a new Treasury Secretary who will change the complexion of what type of Treasury issuance is used to fund the government. And so it's just going to be interesting to see. I think they're going to have to start to deal with the balance sheet early so they don't roil and cause a funding crisis or have money markets get out of control on. So I think that's what you're going to see. And one last thing, Kelly, I think the tax policy debate about the Tax Cut and Job Act, they're not going to be able to do it in one reconciliation bill with border security and also with defense spending. You're going to break it into 2 bills. I don't think they have the votes. The tax is so controversial that it's going to be very difficult. My meetings on the Hill, there's so many back and forth, ideas about how to pay for the tax cuts. It's going to be difficult for some of the members to take votes. I think they're going to ultimately have to break it up, do border security and defense spending first, and then delay the more difficult votes for the tax cuts in June. So right. I think that's the setup for this year.
But Jamie, as you and I know, if the market has months to contend with whether or not these tax cuts will be extended, they may not agree with Scott Bessent that it would be an economic disaster, but they will certainly agree it's going to affect earnings and probably the broader economy if it doesn't pass. On the corporate side, I mean.
I think the corporate tax cuts are not a problem. I think it's more on the 20%, Section 199 Cap A.
Yeah, the fight is over the personal side, for sure, SALT and whatever's going to happen there. But because it's all tied up in the same package, and if it's going to be a separate bill, it'd be much better for markets if it were one bill that we're going to move early in the year, right? If they're breaking it up and we're kicking that into the back half, that's going to mean a lot of uncertainty about a key variable.
I think they can do it by June. They can get the tax package done by June. The problem is the pay-fors. In the last Tax Cut and Job Act, the original, they had a lot of repatriation money that they used to sort of offset some of the costs of the tax cuts. That money's gone. So the other pay-fors are much more complicated, changing, maybe reducing the head of household deductions or whatever on the personal side, or worse yet, changing the deferrals of retirement plan savings for Americans by limiting how much you can defer in your 401k on a tax-deferred basis, or making other changes that might not be so pleasant. So those are going to be much more complicated discussions, and it will create a lot of policy uncertainty as we move through the year. But I think they can get it done by June. They're actually more likely to get it done by June if they break up the bill into two as opposed to doing one.
All right, let's pause there for a moment and dig into this market sell-off we're seeing on these headlines about the federal aid freeze. Dow was down 150 a moment ago. Megan Casella is in Washington. Megan, what's happening?
Kelly, that's the latest this hour. We just have this memo from the acting director of the Office of Management and Budget rescinding that federal freeze on all federal aid programs that was meant to go to all federal programs. But now, let's just recap here. This was issued on Monday night. The Office of Management and Budget came out saying that all federal aid was going to be frozen in place while the White House reviewed it. There was mass confusion over what exactly this would mean. The White House was out yesterday emphasizing that direct aid to individuals would not be affected. They said Medicare, Social Security, welfare, and food stamps. Those were their examples of things that wouldn't be affected here. But there was mass confusion over Medicaid specifically, as well as Meals on Wheels, Head Start, and other programs. Late yesterday evening, a federal judge issued a temporary stay. This wasn't meant to take effect immediately. Now we have this new memo, and I'll show you guys. It's very brief, just 2 lines here, going to all heads of federal agencies and departments saying that this OMB memo has been rescinded. And if you have questions about implementing it or implementing any of the president's executive orders, please contact your agency's general counsel. So obviously here, guys, responding to this mass confusion that we've seen over the past 24 or 36 hours over how exactly this would be implemented, now just rescinding it entirely. Kelly.
Stay with us for just a second. I want to show everybody with this leg lower in the market, there's 2 things going on at once here. The headlines that Megan is telling us about what may be going on with federal funding in Washington. Also, reports out of Bloomberg that the government may also be working on tighter export controls for NVIDIA chips. You see those shares moving down to session lows, just a little bit more than they had been, but enough probably to put some further pressure across the whole markets. Remember, NVIDIA's sales of chips to China specifically are a big question mark for analysts who are trying to figure out what its revenue and earnings exposure are going to be in the next couple of quarters. They were able to kind of thread the needle on export controls earlier. That's in part how DeepSeek was able to still use those chips to create its latest large language models. If there is a further tightening, though, that would certainly be a business headwind for them. Megan, back to you, though, on these headlines coming out of Washington and these questions about, I guess, from my understanding, do we think that basically the White House both put out this order yesterday and rescinded it today, or is there some sort of inter-White House fight going on here?
It could be a fight. It could be just a little bit of confusion over how this was going to be interpreted. So what they were saying yesterday was that this was it was meant to be more narrow, that it was about things like the Green New Deal, DEI policies, that was what they were meaning to target when they wanted to freeze federal aid. But the way that the initial memo was written, it was written very, very broadly, making it seem as if all federal funding was going to be paused. And then we even saw lawmakers talking about Medicaid programs and systems in their individual states actually being on pause. And so it was interpreted very broadly. Maybe it was a question about how it was written and who wrote it and what it was meant to be saying. We could always see them, Kelly, come back with sort of a more narrower, targeted, rewritten version of this in a few days or a couple of weeks. But for now, they're just sort of scrapping it and saying, let's move on.
All right, S&P's down about 2/3%. Megan, thanks. Megan Casella in Washington. We'll continue to follow this story. Michael Gapin, Subhadra Rajappa are still standing by along with Jamie Cox. Michael, I'll turn to you. What are we supposed to think about the Fed in the midst of all this?
You know, I think the Fed has in some ways an easy meeting, but a hard meeting. And I think essentially we're looking for 3 things today, signals about the future. One is how much confidence do they have that inflation is moving lower. We think the data that's come in since they met in December should give them confidence it's still heading lower. That should guide markets to lower rates. On the other hand, as we've all been saying in this segment, there's a heck of a lot of policy uncertainty. The more that they get stuck with that, the more they're probably on the sideline now. So it's a tricky balance for them at the moment. And then third, as was mentioned by Jamie, what do we do with the balance sheet? When do we start having serious discussions on ending the balance sheet? So a lot of things on the Fed schedule today. As Steve said, I'm not sure Powell wants to answer a lot of these questions. They need more clarity, just like markets do.
Imagine if he just canceled the press conference and said, you know what, We're just going to pick it up next time.
Sometimes,
Subhadra,
Kelly, I think that'd be a good idea.
you know, what could be worse than inadvertently causing a big sell-off? Subhadra, yesterday Diane Swank was here and said something interesting, which is while she agrees with everyone that they're probably going to bias towards waiting as this all comes in, that they might have a better shot at doing a cut in March than later in the year, in part because of how she thinks the tariff and kind of price issue will evolve. I'm just curious if you could weigh in on that. And you still think we could have, what, 3 cuts this year, the way that things are looking now?
Yeah, I think that if you look at the trajectory for the economy, everything is fine. But as Mike Gapin was pointing out, uncertainty is really what's driving a lot of the price action, not just in the equity market, as well as in the bond market. So, the Fed is going to be very data dependent. I don't think they tell us what they're going to do at the March meeting, but ultimately their bias is towards easier policy. So let's say we get a weak employment figure, or we get more uncertainty on any of the other policies, and the impact of that are being borne by the market. I think the Fed's bias is going to be towards easing. So, in that sort of context, the market's very efficiently priced in for just 2 cuts for this year. I could easily see a scenario where if the data actually turns and we start seeing some weakness, say in employment, for instance, that the Fed starts pivoting towards easier policy.
For sure.
Whether that needs to be front-loaded or back-loaded is not clear to me. I think that's going to really depend on the sequencing of the data.
But I don't like what you said, because I think we'd all love the rate cuts that come on the immaculate disinflation, as it's called, without the slowing economy part. And it was interesting in the consumer confidence survey where a lot of consumers were a little bit more downbeat about their job prospects. We've seen a little drumbeat of headlines. Now, with some companies that are struggling like Kohl's, but steadily there's been a lot of trimming and job cuts in the news, Subhadra. So is that what you're talking about, where we could see some labor market weakness?
Yeah. You could definitely see that. I mean, there's also the wildfires in California that could have some sort of near-term impact. And then broadly speaking, the impact of immigration, I mean, that could eventually lead to a tighter labor market. But again, we're starting to look at any possible potential sign of weakness. I think the Fed is going to be much more biased towards easing than staying on pause or hiking from here on. So they're going to have to weigh a lot of conflicting, policy, measures and what the impact is going to be. But ultimately, I think that they're probably going to favor easier policy.
All right. Well, I thank you all for hanging with us on this busy news day. And we'll see if it's busier or not next hour. Michael Gapin, Subhadra Rajappa, and Jamia Cox, really appreciate it. Coming up, we just mentioned NVIDIA. Is it invincible? No more. Shares are near session lows and down nearly 6% today on reports of the White House tightening curbs on their China sales. We'll have the latest on the AI front, including Alibaba getting into the race and OpenAI's new accusations against DeepSeek. Meantime, Meta is hovering near all-time highs and bucking the broader tech sell-off this week as it tries to extend its 7-day win streak down about 1/5% right now. The stock, some are calling